All right. Hey, good morning, good afternoon, everybody. Dana Cornell Capital Holdings here. As most of you know, I am here with Shane and Kevin from Hampshire Capital. Wanted just to get a chance for them to be introduced to my network of investors, let them tell you a little bit about the project that we're offering in New Orleans. Just get a feel, start to finish, and ask them some questions that we get in a typical offering to our investor network. So that being said, guys, welcome. Appreciate you guys being here. If you don't mind, Shane, Kevin, give me a little background on you guys, on Hampshire. How'd you get started? Where'd you come from? Where are you guys at now?
Sure. Yeah. Thanks, Dan. Appreciate it. So a little bit of quick background on who I am. I've been in construction development and multifamily real estate investing for 22 years now. Started right at the turn of the century. Mostly, started and focused on as an entrepreneur, doing flips and then building single family residential homes, doing communities, subdivisions, developments, etc. And got into land development, entitlement work. Those all being cash generating businesses. I always took the cash I made in those companies and bought assets, primarily value add multifamily assets, mostly had my own construction firm do the work. And so I've been a GC for 20 plus years. Kevin's got a similar story he'll tell you about soon, but yeah, so, that sold out of all of my holdings here in the Northeast a few years ago and really dove in to focus on growth markets in the South. I wanted to expand what I had been doing because I didn't want to replicate and stay in New England any longer. So, partnered up with Kevin. We have a real strong team, a couple other business partners that came from a LIHTC world, and we've got a group experience of well over 5,500 units under our belt. And so in the last 18 months, we've acquired a little over 1,600 units. We'll be right at about 3,000 doors this year. So we're growing pretty aggressively. And the reason we're growing so quickly is we have a solid team. We're laser focused on execution. And this project, which we'll get into here in a second, is really a construction execution project. But I'll pause there and let Kevin give his background.
Great. Appreciate it.
I want to thank Shane, Dana. Nice to meet everybody here. Excited to be here, excited for this project. So a little about me, it's kind of mirrors exactly what Shane said. I started right about the same time, right around 2000, got into the industry. Again, more with the value-add multifamily assets. Branched out from there a little bit and got into some of the government type funded programs right around the 2008 crash and so forth. Started developing LIHTC, and there was some other programs that had been implemented at that point in time. And then we've kind of self-managed up here in the Northeast. And like Shane, looking to kind of branch out. And one of the important pieces that we have here is, even though we're from the Northeast, in every location we go into, we have a partner on the ground that knows that market inside and out. Otherwise, we just won't even touch it. So in this case, we have one of the members of the GP has 2,000 units himself down in New Orleans and runs the management company that'll be managing the assets. So we really feel like we've got a good, strong presence there with somebody that really knows that market. So that's what's really got us excited about this deal. And the reason we're able to get into it at a decent price, we feel our acquisition cost is below what other people were, just simply because we have those market connections. And this was an off-market deal that this came from. So
excellent. I appreciate that. So you've already got my wheels spinning on a few questions. First, your growth pattern is impressive, right? So how do you see the next few years for you guys? How do you manage that type of scale? I know, Shane, you mentioned the team. Is it the capability of the team that allows you to move that fast and still pay the attention needed to each project? What do you guys think?
Yeah, absolutely. So we have a very detailed business plan, and that has a concurrent staffing plan that goes along with it. So we're we're careful not to grow too fast. I've done that in the past in other firms other ventures that I've started, and that can certainly be a problem. So even though it seems like it's an aggressive growth, because we've been doing this so long, it doesn't feel like we're growing too quickly to us. And really, it's about surrounding yourselves with amazing people, right? So that's why I have, JV partners like Kevin. I have my other partner, Nick. We have Sean. We've got a team of asset managers and acquisitions guys, analysts, staffing, et cetera. And our plan is to bring on actually a construction, project manager here within the next few months to bring construction management in-house and further vertically integrate from there. Kevin and I have been discussing back and forth for the last few months now too, how we ultimately bring property management in-house. But that is a goal, and that will occur. And it's not going to be a profit center, but what it is it's a control mechanism, and it's a speed of execution mechanism. And that's really what drives returns and drives success in this business is execution.
Sure.
And so yeah, we've got, 6-figure salaried employees on staff that have been doing asset management professionally for the last 15 plus years, and that is really, those are the types of folks that are going to set us up to take those next steps in our growth cycle.
So that certainly stands out. Other developers, when that's outsourced, obviously it's a cost to the project, right? So if you have that in-house, you're right, it may not be a profit center, but at least it's not a net negative to the facility if you have the right people in place.
That's right.
Interesting. Okay. So guys, let's jump into this particular opportunity. We've touched on it a little bit. Tell me the story. Where did it come from? What's your vision for it? What's the game plan? I know it's a relatively short timeline for a multifamily project, which makes it a little bit unique, which also drives the returns we can offer both 1031 exchange clients, and we have room for any LP investors. Let's hear the story from your perspective.
Sure. So this was sourced directly from an off-market broker who happens to know the seller very well, through a strange, small world connections, we actually happen to know the same people with the seller as well, and so there's a group connection there where some of the LPs in his deal are friends of mine, and which we didn't know until we figured it all out, right? But suffice it to say, the seller is not a property operator like Kevin and I are. He is what we would call more of an opportunist and a property flipper. So he was able to get this at auction. I think, what was it, Kevin? About a year and a half ago now?
Yeah, about that. Yeah.
Yeah. So about a year and a half ago, he picked it up at auction. And so he had the gumption to sort of put it on the line and buy it at auction. And it wasn't a stress sale at auction. It was an aging owner that wanted certainty of execution and had been jerked around by a few buyers too. And so the auction process gave him what he wanted in terms of a surety of close. So anyway, the seller picked it up at auction. I don't want to say has run it into the ground, but occupancy has not improved. Operations have not improved. He's done some renovations. So we are inheriting some renovations. We've inspected them. They're acceptable. But there's still a number of down units, and he's just not operating the property correctly in terms of staffing, in terms of leasing, care, unit turn, maintenance, et cetera. And that's why, as Kevin said, we pulled in our local partner there, Dave Pinson of Trinity Property Management. He's the CEO of that firm. They're based out of Arkansas, but Dave has personal connections in New Orleans with his daughter living there, and has a number of assets that he personally owns there, as well as his firm manages. It's a good sized firm. They manage a little over 20,000 doors across 11 states. And of course, New Orleans being one of them, where they manage over 2,000 units in that city, in that jurisdiction. So we've really tapped Dave. We've pulled him into the general partnership. He's a member of our team, and we have all oars and rowing in the same direction, so to speak, when we bring guys like Dave on our team.
Sure, that's a huge advantage. So paint the picture for me of the property itself. How many units is this? What's the occupancy rate right now? What do you guys see as how heavy is the lift for renovations?
Yeah, so it's 268 unit property. There are, Kevin, do you have that exact figure? How many down units do we have?
It's 84% occupied at the moment. So,
Okay.
Okay.
So yeah, we'll do some quick math here, but so yeah, there's about 42 units down right now, or in need of turning. And part of our PSA with the seller has him completing, I believe, 16 of those. And so we're going to hit the ground with about 30, 35, 36 units that need to be turned straight away. And so really what this is, like I said, this is a CapEx, construction turn project where we're going to come in, we're going to infuse the exterior of the property with capital, fund the unit turns. There are, what is it, Kevin, 6 down units currently as well?
yep, 6 down to the studs. Yep, we're going to turn those. And one of the things is we're not going to wait at, acquire the building and then go in there and figure out what we're going to do. We've already got that plan in motion. We've had contractors go through. We've got everything lined up so we can start day one on execution of the construction piece of it. Same thing with execution on the management side. So both Shane and I currently still self-manage a portfolio up here in the Northeast of about 600 units. It gives us the unique ability to know how, even though we're not the on-site PM, we know definitely asset management on how to control them. So with that, we are working with them to implement the plan day one as far as what the takeover is going to look like. And that's not just strictly, people will either go in there and say, okay, we're going to run it just like it was. And other people go in there and say, we're going to get rid of everybody, and start fresh from day one. Well, we kind of take a happy medium approach to that because there are some staff members, especially on the maintenance side, that know that property inside and out. We wouldn't want to lose that talent. So we're keeping that right on board, and we listen to the market and some of the concerns there is, some of the crime in that local area. Well, we have a plan to mitigate that, and that's going to be starting to be implemented day one. So if we're in a pocket or a city with higher crime than the nation, but we are the safest property within that, then that's going to just drive value and occupancy from that alone. So that's kind of part of the strategy and one thing we're excited about. Another thing that kind of makes this property a bit unique is today it sits at 268 units. And the valuation on this asset and all our underwriting is based off of 268 units. However, some of the units are a creation where there used to actually be more units and they turn them into like 3-bedroom units out of 2 1-bedroom units. We do see the opportunity. It's not in the underwriting, but in order to even boost values more, we may be able to split some of those units out because on a per square foot rental basis, our rental rates are much higher in a 1-bedroom unit than they are in a 3-bedroom unit. So that's part of the plan, and we're going to see how occupancy is going to dictate how many of those kind of additional units we add to the project. But for a short investment, the return you get by adding doors is pretty substantial. So that's another piece of this deal that's unique and is very exciting to us about this particular project.
Yeah, that's interesting. You don't hear that with every project by any means. So guys, walk me through the timeline on construction, which I like that you already have, you're ahead of the game, right? You're not purchasing, then trying to figure it out. What's the timeline to complete construction? What's the timeline for the project? And then maybe once we're on that kind of roll there, explain the exit strategy, what you guys think is going to happen when you finish things up.
Sure. So our general thesis is the same on every value-add multifamily asset we buy, and it certainly applies here as well, which is day one, you hit the ground running and you show all the value to the existing and future tenants in the exteriors. We will concurrently be doing unit turns on the interiors. However, month 0 through 90 to 120 days is when we really execute on the exterior components. So we're going to come in and we're doing the parking, striping and sealing, exterior lighting, security cameras, getting a functional entry gate, dressing up all of the amenities that are on site, and also we had some dollars in there for HVAC units that we were able to identify that we know are going to need to be replaced. And so we're going to have that capital there to go in and really not have to pull from R&M to replace these items, but do it as a CapEx right off the bat and get that squared up. And I can't stress the security gates and security cameras function enough. This, like all major cities, New Orleans has crime. This property is no different. And so we have experience with these types of assets, B and C class workforce housing. It's about getting that sense of security for the existing and future residents immediately, quickly, and then managing that going forward. And so that's our day one plan that gets executed in the first, like I said, 90, 120 days. We are concurrently turning units and cranking up the leasing efforts, but it really, it's important to hit the ground running in that regard.
Yeah, that makes sense.
So you expect. Just to add to that real quick, Dana, one of the questions you asked is kind of time frame for this. So as Shane mentioned, we're going to start obviously with that exterior, but also do interior turns with the idea of doing half of the units. So basically we'll turn half of the units. So when we go to sell the asset, there's still meat on the bone, so to speak, for the next investor to be able to take it and take it to a whole nother level. And that's kind of the idea of this 2-year hold period, is because if there is still some value add component for the next buyer, then it will trade at a lower cap rate, just knowing that they can drive that value even further. So
makes sense.
Just wanted to add that to the comment.
No, I appreciate that. That's a key point for sure.
Yeah, Dana, let me just add a couple of key metrics to, because you also, I think, asked about the exit assumptions and such. And so I want to put out a couple of key metrics that we dove into relative to our understanding of why this is a good basis. So a lot of similar vintage assets in New Orleans in this submarket specifically that we're in the eastern suburbs of, or the eastern section of New Orleans across the river. They're trading, value add assets are trading in the sort of 80s, right? So about 80 a door. That's a metric we look at. So they're in the 80 to 85 a door range. We're acquiring this asset at $65,000 a door. So tremendous basis play. Stabilized, renovated assets are selling, Kevin, what was the one right down? Was it 120 a door? That they listed it at?
Yeah, 120 a door.
And our exit assumption in 2 years is at 100 a door. So we feel like we're being substantially conservative relative to the opportunity. We're also, like Kevin said, leaving meat on the bone for the next operator by only doing half the units. That generally will increase or rather decrease your cap rate because your selling cap rate, and we're planning obviously on cap rate expansion and modeling cap rates in the 5s. So I think all those things together allow us to be sufficiently excited while being sufficiently conservative on our exit assumptions.
That makes sense. So guys, talk a little bit about, and thank you for that. I think that frames in the strategy. You guys certainly have thought through the plan, and the exit strategy makes sense. We always like to be more conservative and hopefully over deliver. So I appreciate that approach myself. Talk to me about, one question I'm getting a lot from investors is obviously rates have risen quite a bit. Our analysts think they'll likely come down towards the end of the year, but how has that affected your project? What contingencies do you guys build in for rate changes? Does it matter to you guys? Talk a little bit about, I guess, that and just any contingencies you've built in and safety guards. And then maybe, if you don't mind, while we're kind of in that same vein, what are the 3 biggest risks to throw this thing off one way or another?
Sure. So let's talk about the interest rate and, debt stack first. So we have secured bridge funding and we have secured it at a fixed rate. So our interest rate is secured for.
So you're already locked in.
We're locked in. So the rate changes don't necessarily affect us, whether the SOFR forward curve looks to be rising, stabilizing, decreasing. It really doesn't matter in this particular transaction. And then, the second part of your question for the three greatest risks, look at it in this for this project, it's absolutely construction execution. That is the greatest risk that we hold. And Kevin and I, have, even though it's all non-recourse debt that we sign, there are completion guarantees in that recourse debt. And so this is a construction project. And so that's our greatest risk, and any investor's greatest risk is the execution on the construction component. But again, with Kevin and our experience, with the fact that we have our local business partner, Dave Pinson of Trinity Multifamily, on the team, and his group, his construction group are the ones executing. They have all the subcontractor relationships. They've all already been to the site. We have all that locked in terms of what the scope of work, unit specifications are, as well as firm bids from all of the subcontractors that are going to be there. And he's got years and years of experience with these subs. So we feel like we are mitigating that risk properly with our team there. The other risk, of course, is leasing, and having, getting the right people in there at the right rent levels. Again, our rent analysis in terms of rent comps and comparable properties, we model to be at our renovated rents to be slightly below what other people are already achieving. So there is always a risk of, can you lease up in a timely fashion, and can you achieve those rents, right? So we try to underwrite conservatively to allow us to hit those metrics and hopefully exceed them.
Okay.
I think that's only two. Kevin, do you have another risk that we have on this project?
Well, I guess one of the other risks that everybody asks about, everyone remembers back to Katrina when it flooded. Couple points on that. We have insurance already secured on the property for wind, flood, building insurance. So we're covered from an insurance standpoint. However, when Katrina did flood, this property did not see water. This was above the area. It's still technically considered in the floodplain, but Katrina, I guess, is the biggest indicator that we have of actual floodwater elevations. And this property did not flood. So, is that a risk? Apparent, obviously it is a risk, but, we feel pretty comfortable knowing, how it made out during Katrina, and the fact that we do have an insurance policy already in place, which actually came in a bit under where we underwrote it. So we were pleasantly surprised with that.
Right.
Good. So guys, I think we've covered start to finish. I appreciate you sharing your story and the story of this particular opportunity. I'm glad my network is to meet you guys, because I believe they'll see a lot more projects from you guys in the near future. And we're happy to represent you on this one. Anything else before I let you guys get back to your day-to-day? Anything else that stands out on this property, this project? Any last kind of parting key points that you want to mention? We've covered a lot already, so maybe.
Yeah, we have. I think I would just maybe do a quick summary that the key salient points for me as an investor in this deal, as I'm also personally an investor, as is Kevin, are that number one, we're acquiring at an amazing basis, and I like deals where I step into equity. If we hit the ground day one and did nothing and just turned around and sold it, we would all make money. So we have a great basis. I like the short fuse and the short timeline. Frankly, 134 units to turn in 2 years. We've done double that in 1 year, right? It was a much larger asset. It was a 500, 600 unit asset, but suffice it to say, the renovation cadence feels right and feels achievable in terms of mirroring that with the leasing velocity. And again, I like the 2-year turn on this. It frankly could very well be a 14 to 18 month execution and exit. However, we always like to say worst case scenarios. And even beyond that, worst case scenario is if we had to refi and exit in 2 years, the property will have substantial cash flow. We always do that analysis as well as, hey, if you can't sell it, where are we going to be sitting in terms of a cash position, debt coverage ratios, free cash flow to the asset, and we will be sitting at a debt coverage ratio that is close to a 2.0 DSCR. So we feel really solid about covering the downside all the way around on this.
Excellent.
Kevin, anything else to add?
Yeah, if I can just add one more parting thought, and I know Shane, you touched on it a little bit as far as the guarantees. So as Shane mentioned, we're both cash investors into the project as well. Not only that, there's a cross-collateralization piece to this where if we mess up, there's about 3x in cross-collateralization assets at risk for us. So, execution is our, we have to, or we would lose so much more than just this one project alone. So a little bit of a surety there from the GP side. So just wanted to finish with that. Thank you for your time, Dana, and happy to get on a call with an individual investor if they've got further questions we haven't covered.
Yeah, I appreciate that, guys. And I know, Kevin, we've met fairly recently, but Shane, you and I go back quite a few years. So I've seen the product you guys put out and seen it start to finish, and you guys always deliver. So I appreciate that, and that's why I'm comfortable putting you guys in front of my audience. So that being said, gentlemen, thanks for the time. Looking forward to finishing this one up for you guys, and on to the next one.
Sounds good. Okay. Thanks, Dana. Appreciate it.
Thank you, Dana.
Thanks, guys. Talk soon.
All right. Bye-bye.